How do different commodities interact with and influence one another?
From a very basic standpoint, we'll keep it focused with agriculturals. The corn and the soybeans and wheat all work together because they can be used as feed substitutes. And a lot of times with one growing condition affects, of course, the other growing conditions. And then it, of course, affects the overall supply for what's available in the country and then what can be available in the world. And then if you wanted to take that to the animal side of things, well, of course, we saw in recent years when the corn price was so high, well, hey, wheat's not so expensive. So wheat then becomes the cheaper substitute that a lot of times is used. So they are always connected, and one absolutely affects the other.
The simplest way that happens is that, some are substitutes for each other. Corn, wheat, sorghum, all of course, have to be interrelated in price because they can be used as a feed source. Domestically, we often don't even think of wheat as a feed product, but you go to Europe, that's very common. They produce wheat, so they're going to feed wheat. So they all have to keep a certain amount of relationship there, and that does apply over to the soybean and soybean meal markets again, because really the value of a soybean is the value of those products, and of course soybean meal is a major protein source for the livestock industry as well as the food industry. Again, the profitability of each of those, in certain parts of the country, there will always be a competition for where the acreage goes. So absolutely, you can't really just study a commodity and feel that you have a handle on what's going to happen to the prices, because it's always an interaction, an interplay between all of the various commodities that we can produce within a country.
If you look at corn and wheat, they're interchangeable. Coarse grains, they're part of coarse grains as well. Rice comes back, it's a major food in the world, and then so is wheat, major food. Every country uses wheat, and many countries use rice. So when shortages show up, like for example, the rice supplies get very tight, corn supplies are getting tight, all of a sudden that shoves demand somewhere else. They got to find another place to go. That would be wheat. So you have to watch what's going on in all of those at the same time, and that starts to build a case as to what you think is going to happen in that market.
These relationships have changed basically since the 2005, 2006, since computers took over the trade. You don't have those emotional ties, those psychological ties between markets anymore. Every market seems to be trading on its own. There are times, again, where they will be connected and one will influence the other, but the correlation and that relationship just isn't as tight as it used to be.
There's a definite interrelation, but markets really move on their own supply demand, and so you have to be careful if you're buying corn because wheat's going up, because corn has its own supply demand, and when wheat stops going up, corn will seek its own level.